Howdy, Team 42. It's your skipper here, Darius to present our macro minute for Thursday, April 3rd, 2025. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions and to see if you need to make any changes in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is technical recession or actual recession? Obviously, we're a day after Liberation Day. We'll find out what that means economically. So let's just get into our answers here. In the Rose Garden event yesterday that he dubbed Liberation Day, President Trump announced a 10% minimum tariff on all exports to the U.S., plus reciprocal tariffs on dozens of countries, raising the effective tariff rate on U.S. imports to over 20% and over 60% on Chinese goods, and fulfilling a core campaign promise. Bloomberg Economics pegs the new effective tariff rate on $3 trillion of U.S. imports at around 23%, which is the highest in over a century. The now infamous 2018 Fed trade model estimates the 20 percentage point tariff hike lowers GDP by 2.9 percentage points and lifts inflation by 1.9 percentage points. The same model predicts the unemployment rate will rise 100 basis points to 5.1% by mid-2026, likely signaling a recession if accurate. Recent forward guidance from White House National Economic Council Director Kevin Hassett was supportive of our transition from Paradigm A to Paradigm B view. He said, the president believes we can replace income tax revenue with tariff revenue. And if we can replace income tax revenue with tariff revenue, we can make everybody better off. And obviously, everybody being American citizens. To that point, Senate Republicans will soon vote on a new budget resolution that dials back House favorite spending cuts, extends Trump's 2017 tax cuts, and lifts the debt limit by $5 trillion. The Senate's reconciliation math uses a fuzzy current policy baseline to nullify the cost of extending Trump's 2017 tax cuts, which expire at the end of 2025. The Senate plan allows $4 trillion in tax cut extensions and $1.5 trillion in additional tax relief versus relative to the House's $4.5 trillion plan. President Trump backed the Senate proposal, saying it has its complete and total support. When the Fed starts implementing the QE we've been forecasting since last fall, that may be the final chance you get as an investor to sell your entire Treasury bond portfolio at a decent price. FYI, 42 Micro clients already did so last October when we permanently pivoted the 30% in our 60-30-10 KISS portfolio construction process out of bonds and into gold. Ag is unchanged and gold is up 13% since then, outperforming every asset in the world except Bitcoin. It will soon overtake Bitcoin, too, if our kitchen sinking thesis continues to unfold perfectly according to plan. So obviously, there's a lot in there. Even before we transition to our 42 Macro dashboard here, where we wrap up with a question and or comment from our community, I just want to say, if you're losing money today at all, you don't have to be. I don't say that with any degree of arrogance. I say that with all humility and the plea for investors to start taking their financial future more seriously. We built 42 Macro to add sophisticated institutional grade risk management overlays to investor portfolios, not just for the institutional investors. I've been serving across global Wall Street for the past 16, 17 years, but also the now thousands of retail investor clients that benefit from those exact same overlays. And just wrapping up with this comment, this client is saying, this retail investor client is saying, I exited all the stock positions in my retirement account around a month ago as per Darius's recommendations. It was tough to do, but I just followed the risk off call. Thank you, Darius. So recall that we sold all of our stocks in KISS and in our KISS portfolio construction process, which we used to help our retail investor clients stay on the right side of market risk. We sold all of our stocks at the beginning of March, on the first trading day of March. We still had a little bit of Bitcoin left from the sales that we made back in February in Bitcoin. But by and large, our portfolio has been cash and gold, since the beginning of March. And our clients are obviously really, really benefiting from that, especially on a big down day like today, where the rest of the world is waking up to the kitchen sinking thesis that we authored last fall. I don't really know how to say this without sounding arrogant, but by Jove, we've been on a ridiculously impressive run. Go back to 3 years ago in 2022, where we pivoted our clients from being bullish to ragingly bearish in December of 2021, ahead of the massive meltdown in markets in 2022. In January 2023, we pivoted our clients from being bearish to bullish ahead of a kind of a mini melt up in markets in 2023. I think I want to say the stock market was up 20%. Bitcoin is probably up 50 to 100%. We were max long heading into 2024 and generally max long for most of 2024 throughout the raging bull markets in stocks and Bitcoin in 2024. And then heading into the late February or at the beginning of March of this year, we pivoted our clients from being bullish to being some version of max bearish. That's about as good as a run as you're going to see anybody in institutional finance have over the past 3 to 4 years. Really grateful for the opportunity that we've had to grow our firm. Really blessed. Thank you, Lord, for giving us this platform to help people. I said this to our client the other day, like I haven't taken a pay increase since we started the firm. Every dollar we make goes right back into the business. And that's exactly why we continue to innovate. That's why you see this wonderful, amazing dashboard in front of our clients that our client community chat, lives and breathes in. That's why we're going to overhaul our signal section. That's coming this Monday. I'm excited to roll that out either early next week to our clients. And, we're really grateful for the opportunity that we've had to, really positively impact the lives of thousands of investors. I mean, this is the ethos why we started the firm. A life is not important except in the impact that it has on other lives. The reason I left my cushy, high-paying Wall Street job to start 42 Macro, well, there's a bunch of reasons, but one of the main reasons was I got sick of making rich people richer. I wanted to make regular people richer because I'm from the wrong side of the train tracks, and I want to make sure I bring those people with me on my way to the top. And guess what? If I stay alive long enough, Lord willing, I'm going to the top. So you can either hop on the rocket or you can fight the exhaust. Have a great day. Cheers.